Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Remember to check out our new website. You can peruse almost any subject related to commercial real estate and check out blogs and videos and articles. And our new feature, Ask Michael Bull, where I answer a commercial real estate question by video every business day. It's commercialrealestateshow.com. Or our show today is about apartments, the multifamily industry. Please welcome my guests, Nick Caleras and Daniel Alexander with AH Capital. AH Capital is a real estate investment company. They do business and own properties in California, Georgia, North Carolina, South Carolina, and Texas. Gentlemen, thanks for joining us.
Thank you.
Thanks, Michael. It's great to be here.
So you guys have been out active. I guess you're still actively looking and buying properties. Is it the right time to buy apartments? I mean, some people say we're past the right time, but as we just heard Stephanie say, B properties are starting to really improve well. And C, what do you think?
Well, I think there's tons of opportunities out there for us, at least. We think we've identified a new class, sort of in between the C-B class. And so there's lots of raw material for us to buy that fit that criteria.
That's what my son said about his grade. There was a new class between B and C. So you're seeing a lot of opportunities, and you expect growth. What are you seeing on your existing properties as far as current performance? What's the trend there?
You know, the trend is very strong. There's no secret. The macroeconomic environment is very favorable right now for renters, especially in this space that we operate in, where rents are affordable. And you know, everywhere where we can go in and get a property up and running, it leases up very quickly.
Okay. So if I'm a seller, I'm a property owner or an advisor, what type of properties should I bring you? What size and areas and would you be interested in?
That's a good question. We call that the raw material for the new final product, I guess, so to speak. Something that would be similar to in layout internally and externally of something that you would build Class A today, meaning, you know, nice unit sizes, plenty of space for parking and amenities and stuff like that, but dated, maybe reaching the end of its usable life, and we can bring it back to life.
Okay. So 100 plus units, major cities, value add, can have some vacancy.
Absolutely.
Yeah.
You got something right now.
The more problems, the better.
And how are you guys finding financing for those types of properties? Are you having to just pay cash, or are you able to get some good loans?
Well, what's interesting is, you know, in the last 12 months, the financing for these types of acquisitions has really opened up. And I think it's just a function of what's going on again in the macroeconomic situation. You know, the banks are sitting on, you know, almost $2.5 trillion of excess reserves, and they got to place this money. And so stuff that was, you know, untouchable a year ago, now they're calling us, asking us if we have any.
Yeah.
Yeah.
Well, that's great. I think it's a great time for apartments, and I think you know, that B and C product really has a lot of upside, and I think it's smart for lenders to be financing that type of property. And a lot of people like apartments. People like the sectors that they work in. What are some of the advantages of investing in the apartment market today?
I love the flexibility of it. I think if you're going to look at a development play in the future, it's a great way to hold a position. But also, you know, you could continually remake the product on the ground level, you know, based on your client base. So there's tons of flexibility. I love it.
Yeah, and just to add to that point about flexibility, the interest rate environment, you know, makes apartments particularly attractive right now because, you know, we think of interest rates as sort of the shot clock, and the lower they are, the longer the shot clock. So you have more time to sort of figure out how you're going to score, how you're going to make your return, and with apartments right now, it's a great situation.
Yeah, that's a good point, and I like the fact that you can do so much more in management, especially in that B and that C and that new class between B and C that you guys have found and my son's found. He's going to kill me, but yeah, I mean, good property management in those types of properties can really be a big difference, can it?
Absolutely.
Yeah.
I mean, it is the difference. Obviously, we're all trying to increase the NOI, so to speak. So you want to find smarter ways to do that. And a lot of these properties that have reached the end of their usable lives that we talked about earlier, they are not run very efficiently. And so there are tons of opportunities in that way.
Yeah. And when we look back at, you know, on our own track record, where we've made mistakes, that's where we've made the mistakes is is not having the right management in place. And I can't understate how important it is to have a good manager, especially in these kind of properties where they're coming out of years of being undercapitalized.
Yeah, and that's always been beneficial for me as a broker selling apartments, is actually to find those properties where you can go in and as a broker say, you know what, this could be managed a lot better, and bring guys like you those kind of opportunities that you can help perform better and create more value. What do you guys see for investors in the space right now? Are you seeing more foreign investors in the U.S. buying apartments?
Yeah, absolutely. We started seeing it. Part of our other business, we do some residential redevelopment in Southern California, and we started seeing foreign investors enter that market in probably mid-2012. Mm-hmm. And these are folks that have made money, entrepreneurs have made money overseas, and there's no better place to put it than in the United States. And if you have a large amount of money, there's only one place to put it, and that's in real estate. Mm-hmm. Because the treasury markets doesn't give you any yield, the stock market's overvalued, so real estate has become the place for these folks to invest. And I think they're going to flow into this space. They've already gone into the Class A space. It's obvious with the cap rate compression that you see in the major markets, where stuff, Santa Monica stuff is trading at 3 cap. I think it's going to flow down into the B's and C's eventually.
Yeah, that's interesting. Well, what else do you think is interesting about this particular cycle and the particular economy and where we are in the apartment industry today?
Yeah, I think that what's interesting about this cycle is it kind of relates back to the macroeconomic situation, and in particular in the United States, because the Fed is in a very tough spot right now. Mm-hmm. They have put in a significant amount of pent-up inflation pressure, yet at the same time, it's a conundrum. There's still the chance that there is another liquidity crunch and another deflationary spiral. So it's a really weird space, and I think that's why apartments are actually so attractive, because in essence, it's a very conservative investment. Mm-hmm. Because you're talking about, steady demand. Regardless of where the business cycle are, people need to live, and it's at least in the B and C space, it's very affordable.
As the economy has been improving, I'm curious about these B and C properties that you have. Have you seen collections and credit risk? Have you seen a dramatic improvement in that area as the economy's improved? And have you seen any variations in the type of tenants and tenant strength you're getting?
I think going in, there could be a little bit of a shock factor if you're not used to this class. Mm-hmm. I guess we're pretty well equipped for it at this point. But this new class that we're kind of talking about again, sort of like a premium economy class. When you get that buyer, they know what they expect, a certain quality product, and so you have less of those issues that you would normally have in the broad class.
Yeah. And I guess you're getting less tenants that are exiting to buy property, right? I guess you're getting a lot of it exiting A, coming to the B, and exiting B and coming to C. Is that where some of your tenants are coming from?
Yeah, definitely. And I think the statistics are there was something around 5 million foreclosures during the crash, mm-hmm. and only 800,000 of those folks have subsequently gone and rebought homes. And so there's 4 million people who used to own a home who are now renting, and we've been able to capture some of those clients in our B properties for sure.
Quick tip, can you recommend a book to us?
Sure. Definitely. I for anyone in the real estate game, I recommend a book called The Great American Land Bubble by Aaron Sakalsky, and it just shows that this is not anything new. The crazy times that we've been through over the past few years has been going on since the 1790s when George Washington was speculating in real estate.
Well said, gentlemen. Thanks for joining us. More on the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.